So now today our next topic we're gonna cover is that now we are discussing 16.2. Okay. So today is May 14. So we covered this one. We already covered this. Now we're gonna cover our next. So let's see what is the next. So I'm gonna run this. Why I'm marking over here? Because small points so we can add for easy search. Okay, so next point is drawing of goods from business for personal use. That is not in for business expense. That is not for business expense. Our fifth point, drawing of goods from business for personal use. So who can do this? As an employee, we can do this. Who can do? Employee can do this, or owner can do this. Owner of business. If he employee take in this way, so it will be either is allowed under as an expense, but it will not be treated as a drawing. It will not be treated as a drawing. So this option is not applicable over here. So drawing normally pop up when the owner take. In the previous, we took the example of if the business owners took two laptops from the business for family. But the owner, the accounting team, they recorded business expense. So let's say the two laptop cost 10,000. So what happened? This is the business expense. They recorded as a business expense. So our accounting profit decrease. How the decrease? We have the 100,000 accounting profit. We took this also as a 10,000. So our accounting profit is 90,000. But now we come to know this is not for business. We come to know the owner taken for his family. So this we said, okay, this is the drawing. Okay, even owner did not give the money, so it will be treated as a drawing. So when it come as a drawing, so what we're gonna do that? Add back. So 10,000 will be added back. So again, our accounting profit will be increased. So it will be raised to the 100,000. Why we are doing this? Because if this option are allowed, so then tax authority will not able to collect any money. Because everybody say, okay, my kids needs today is the car, today is laptop, today is many fancy things. So they will give the bills in that way and they pull all the profit from the company. Any question, please? So next is a reasonable apportionment, where personal element included into the business expense, car expense, telephone expense. So same laptop example we discussed the previously. Yeah, yes, please, Amir. Please unmute yourself. Amir, raise the hands. Please unmute yourself. Distribution of goods as a free sample to imply a potential customer can be deducted as a. See, this is a very genuine question and the common question. Okay, so when we talk about the sample, okay, the sample is a marketing. There is a difference. Marketing is the different. Of course, it will be deductible if is meet all the condition is treated as a marketing. Okay. Again, the misuse may happen in that scenario also. That's something, if it's a genuine case, yes, it's good to go. Okay. If given to the potential customers or the employees, okay. Normally what happen in the each, I'll give you the example. If the diaries, like the bags, are the some gift that with the logo, company logo. If when you given some goods with company logo, okay, that you are saying as a marketing, okay, is good. But if you given the same stuff like the some bags, laptops without any company logo, without any company logo, so that may not be considered or accepted as a gift or the marketing materials. As long as we are able to prove that this is a business expense as a marketing as that is good to go. Okay, so next we have the reasonable apportionment. Reasonable apportionment seem like if we have the phone, normally common is the phone or the cars. Okay, let's say the company car. Let's say the company car. So the company car, if normally even under the VAT guidance also, regulation also, they're saying is have to be in office premises. This car coming under the restricted vehicle, even 1% private use. Okay. But let's take as an example, if we are saying this is the company car and this is the expense of the business, yes, it make deductible as long as we have the, the strong HR. Strong HR means policies and procedures. Policies and procedures. If we have the strong HR formalities are there, how the word strong is why I'm mentioning if you write in the employment contract. One of the as a reference, I'm not saying always, but I'm saying as a reference, Mohri. If we write in employment contract, Mohri, okay, he's eligible for the company car, he is eligible for the phone, he is eligible for the 3 kids insurance, he is eligible for the uh, kids insurance, tickets, okay, and such stuff that. So this is the when we talk about the strong documentation, so this is one of the example, but again depends upon the many other factor, but this is one of the example. So a reasonable apportionment, if we given the car and or we can say the telephone, okay, the phone bills, we have the policies, okay, at the month end, if we have the due or the itisalat, at the month end you will get the statement. In that statement, you will ask the employee as per the HR policy, okay, you have to give the breakup. How much is a personal? How much is a business? If you run this practice, if you have this policy and the procedure, again, it is a self-assessment. You have to comply with that. Of course, then this is called the reasonable apportionment. The word reasonable is they not mention 50-50, 80-20, 70-30. So this is called the reasonable apportionment. When the FTA come and they will ask certain question, you will have the standard policy document. Then they will take sample base, okay, some testing. And if everything is good, is good to go. So this is called the reasonable apportionment. There are many areas. These are the two common examples that normally we used. Now this is the recoverable input VAT. This is the very interesting and the important and the very confusing and challenging also sometimes. Recoverable input VAT. Point number 7. Irrecoverable input VAT. The word is important, irrecoverable and the recoverable. Irrecoverable is allowed and recoverable is disallowed. Now again, same redeemable and irredeemable shares that we are discussing. So let's understand what is the, if we understand recoverable and irrecoverable, then it's good to go next. Recoverable means VAT law allowed us, VAT law allowed us to claim back. This is the test we have to do, irrecoverable and the, in both cases, recoverable, irrecoverable. This box is yes or no. VAT law allowed us to claim back. So normally the word is used blocked. The word irrecoverable, the law is saying is not allowed. The law is saying some of the expenses is blocked. If the law saying is not allowed, so this is called the irrecoverable, means you cannot recover from the authority. Like the we buy the car, restricted vehicle. This is one of the example. Restricted vehicle. What are the restricted vehicle? Even 1% personal use VAT is blocked. 1% personal use, the VAT is blocked. So the car is one of the example. So we cannot recover. So as per law, this is the irrecoverable, and this can be deduct under the. This can be. Taking the same example again. If we have the accounting profit, 100,000, and in which we already minus the 10,000, in which we already minus this. What is this 10,000? VAT on restricted vehicle. So our accounting profit is, accounting profit is 90,000 after. So now why we deducted here, why we put in the income statement? Because law is saying is not allowed to recover from the FTA. So we put in the expense. What we did, we recorded as the expense. What happened? Okay, so irrecoverable mean we recorded the expense, and now this 10,000 we will add back? No, because this is the irrecoverable and it's allowed. So this is good to go. Now, what is the recoverable? What is the recoverable? Any question so far here? Before moving to the next, any question? Okay, now let's go to the,
So one doubt
yeah, please.
related to the reasonable apportionment. If
Yes,
the expenses like the related to car or telephone, in case of a sole proprietorship, the owner uses the car for personal as well as for the business purpose, then will this be allowed or disallowed?
that will be disallowed
Completely
because
disallowed?
the word you mentioned, the sole proprietorship, is not the LLC. Is not the LLC. Yes, it's completely disallowed. We are coming on that point. That point is there, so we will discuss on that point.
Okay.
Okay, we have that point. Okay, here we understand the recoverable. Now we understand, sorry, irrecoverable. Now is the recoverable. So what does mean recoverable but did not claimed? Did not claimed. We can claim from FTA. What is the scenario? He's saying allowed to claim back from FTA. By law, you are allowed to claim back. What is the example? Like we purchase the normal trading goods, okay, normal business activity. If we buy the normal business activity, trading, if like we are doing any kind of trading goods, I'm just giving a common example, trading goods. We receive the vendor bill. So vendor charge us 10,000 plus 500 VAT. So total bill is 10,500. So what our accountant did, he said, okay, this is the cost of goods sold, let's say. So debit cost of goods sold 10,500 and credit bank 10,500. So he recorded in this way. So what happened? This VAT 500 is recorded as a expense. Actually, we are allowed to recover from the FTA, but he recorded as the expense. So our accounting tax profit will be reduced, decrease by 500, right? So if he record the cost only that 10,000, okay, balance VAT he can recover from the FTA. That's the normal treatment as per law. But now what is that? Recoverable but did not claimed. So this 500 that you recorded as the expense. So let's say theme accounting profit. Accounting profit, how much? I'm gonna take the 100,000. So what he did, he already minus 10,500. So how much here will be? 89,500. Okay. So now this is disallowed. This 500 that he expends out over here. This is the disallowed. FTA is saying you able to allow you to recover back, but you didn't due to your mistake or you didn't record the properly. So you have to add back. So this will be 90,000. So this is the basic principle difference where they're saying irrecoverable and the recoverable. Because if we understand this, this will be the easy for the this concept. Okay, so now we can take the example. I think the drawing, we already understand the concept. So we are focusing on the recoverable input VAT. Restricted vehicle, we also discussed that. The same we taken the example as a 10,000 plus 500 VAT, it is the same. If we purchase a restricted vehicle with 1% private use, the VAT is blocked. So if we purchase for the 100 plus input VAT is 105. Okay. If is a blocked irrecoverable as per law is not allowing to claim input VAT is expense and deductible. This is the first example that we understand. This is same transaction, but we covered in the. I'm gonna to next slide. So first let's cover this. What is that? Recoverable and irrecoverable. So let's we discuss this part. So now the VAT related to the expenses. Entertainment expenses, this is the first part, the staff entertainment. Okay. Then the customer entertainment, this is in the previous slide we covered in the detail. Then the personal expenses. This is the related to the staff. If bill is the 100,000, input VAT is the 500. Okay. UE allows 100% expense is good for the staff. And the same, now the same, if we take the example of the previous one, if by mistake we recorded the expense of 100,000 and against the bank, law is saying you can claim back by mistake. If we didn't claim, we record as the expense is have to add back. The same way under the, if we consider from entertainment point of view, yes, 100% allowed. Now, if we're considering the second point, what is the second point? What is the second point? Recoverable input VAT. On the same example, recoverable input VAT, we also learned that if we not, if we did the error, we will lose that opportunity. Okay, next is the customers and owners, suppliers. This is also we discussed in the previous slides. Related to the owners, customers, bill 100,000 plus VAT, invoice is 100,005, 50% disallowed. This we will add back. Then the personal 100% disallowed. Then the personal is 100% disallowed. This is again the same example. I believe we already covered in more detail these points be related to expense. Okay, here the 1% private use vehicle. We already discussed the private use, each vehicle is blocked. If private use vehicle is blocked, so that is the blocked means the law is blocking. Okay. If law is blocking, then it's good to go. Okay, let's go back. This we skipped the point, so we are just going to that point in the previous slide. Okay. We discussed the point number 7. Now we're going to discuss the expenses related to exempt income. What is the exempt income? What is the exempt income? Dividend, one of the exempt income we discuss, we started with today. Okay. So local dividend, if local dividend, exempt income. In accounting, we are reading that, or we learning that matching concept. Very common, even the accounting graduate is focusing on the many accounting fundamentals. So one is matching concept. If anybody wish to explain this concept, I appreciate the participation. If anybody would like to explain this concept. I appreciate your participation. Government is saying expense to be matched with corresponding expenses. Okay. So here we are seeing the exempt income, local dividend income, the local dividend income. If we are not paying tax on this, local dividend we said is exempt. If income is exempt, then expense belongs to exempt income will not be deductible, right? So what are the expenses? Broker's fee, because we buy the shares. Who are the broker? He will charge his fees, his commission, legal fees. Okay. So whatever the source or whatever the activity we used, okay. So normally even we buying the shares online. So there is the different brokers like the each bank they have the securities section also. So the ENBD they are not charging any fee on the brokerage for buying and selling of the shares. Other banks they are charging on the I think 0.15%. They are charging their commission fee. So if we buying and selling the shares as a company, as a juridical person, as a taxable person, so we are saying we will not pay the tax on this income. Then they're saying whatever the expense associated to that income that you in accounting you already recorded, okay, you already minus, you have to add back. Maybe 2,000 for the brokerage fee, maybe a transaction fee, another 1,000. So in accounting, we already minus. Okay. So this we have to add back. Why? Because we already minusing the income. Let's say we earn the 10,000 from the shares. So we are saying this is the we receive the dividend. If we already added into the our accounting profit, we will minus from there. If this one we are minusing that is already added, so whatever is already minus, we have to add back. Hope this concept is clear. Oh, now this next couple of points we already covered, we already discussed. The same example we discussed. Any question is most welcome. Okay, so now the next is loss related to non-taxable activities. The same way the last point we discussed, the exempt income. So same way loss related to non-taxable activities, this is also will be same. If we buy the shares, of course, why we are doing, we will sell also. While selling, it might come the profit, might come loss. If this profit is not taxable, so this loss also not deductible. Loss related to non-taxable activities. Hope this concept is also clear. Personal expenses generally not allowed. Personal expenses, one of the example we discussed. Like the common routine example, if the business owner, if business owner, see, mostly we are discussing the concept for the business activity. Okay, the business owner buy the wedding anniversary gift for his wife. He asked the accountant, okay, make the payment and deliver this gift to my home. This is a personal, it's not allowed. Okay. So any kind of personal, if you buy the car for personal use, okay, is also disallowed. Although in market we seen many non-compliance regarding the cars. They buy for personal use, but still they are putting under business as expense. Okay. Illegal action, bribes, payments, fines, penalties. This is also we discussed in previously. See, illegal, if we traffic signal, we set the traffic signal. If we get the fine for the traffic signal, what are the important factor? Law. If we did some violation, and law applied the fines and penalty. This is not the during the commercial arrangement or the performance later. This is law. So this will be disallowed. We have to add back. If we paid the traffic fines, if we red signal, we cross the red signal, and the RTA add the fines. Maybe recently we seen and the previously seen news the 50,000 fines to the taxi driver or the any local any resident who crossed that red signal, he got the fines. So he have to pay, okay, but it's not deductible. So what are the commercial contract? If we did some building contract, we have to deliver in December 25, okay, December 25, but we're not able to deliver, not able to deliver. So he had the 10% penalty. This is the commercial. The commercial, what does it mean? Commercial performance related. This is performance related. This is the deductible expenses. So this is the basic difference. Wherever the we disobey the law and we paid the fines, that is not deductible. Wherever the commercial or business relation are in performance related during the normal course of action, that is deductible. If the same building, okay, if same building, there is some violation of the law, okay, violation of the law. Municipality applied the fine because due to law violation. Now the important, this is not the contract, this is law. So this will be non-deductible. We have to add back. This is the haram. So this is the important point or the important difference over here. So this is the 12th point. Which 12th point? What we are discussing these 12 items from one of the eight. One of the eight adjustment. This is the first adjustment who have 12 items. So we are discussing that. So we reach up to 12. Any other payment by ministerial decision, cabinet decision. So far, common important item we already discussed. Okay. This also we covered, but here the participating interest, the same shares. We taken the earlier for the dividend. So here they are saying the non-take the same participating interest shares exempt, foreign dividend, gain and selling, local, foreign. So these are the same example that we discussed and covered before. So here are the some additional points. So SBR, so this is another note, okay. No business losses claim in future. Okay, if in 24 or 25, 24 and 25, we apply SBR. If we apply SBR, the tax losses cannot be claimable in future. This is the because we claim the relief. So here the important part, if we have the losses, we should not go for the SBR. We can save our the tax losses for future. Okay, this is the same, just couple of more example, but on the same. So important part is here, this is the one of 8 adjustment so far we covered. Under that adjustment, there is a 12 point. So any question? So this our first part is covered. So now we're gonna to the next part. Before that, we will take one short break.